Good afternoon, everyone, and welcome to our webinar, Commercial Tenancy Relief Scheme. My name's Lisa. I'm the Marketing Manager at O'Brien Accountants and Advisors, and we're very grateful to have you along today. As mentioned in the invitation, the regulations for this reintroduced scheme have now taken effect, and we expect that this will impact many of our clients. So we're pleased to offer you this update today. We wish to acknowledge that the content has been produced by Pitches Partners, whom we have an excellent business relationship with, and we share this information with their permission. This information is of a general nature only and does not take into consideration your personal circumstances nor constitute personal advice. Today we will cover an overview of the scheme, tenant rights and obligations, how to calculate turnover, landlord obligations, and how we can help you. Now I'd like to introduce our presenters, Chris Mullins, Principal at O'Brien's, and Daniel Vogelpol, our Technical Director. They've both looked into the detail of the regulations and look forward to sharing insights with you today. I'll now hand over to Chris.
Thanks, Lisa. Hope everybody's well and surviving lockdowns, earthquakes, riots, and anything else the prophets of doom can throw at us. So it's obviously been a fairly interesting 48 hours. Yeah, so obviously Lisa's just gone through what we're going to cover today. So without further ado, I'll move straight into the content. So today we're looking at the Commercial Tenancy Relief Scheme. It's a Victorian-based scheme. It's designed to provide support for tenants impacted by COVID-19 and is substantially similar to the provisions of the previous scheme. There are, however, some key differences. I'll just go through those key differences quickly. There is a declining turnover test, which you'll be all familiar with, that was with the previous scheme. The previous scheme piggybacked off the back of the JobKeeper scheme. With no JobKeeper scheme prevailing at the moment, they've introduced a similar declining turnover test that Daniel will go through a bit later on. They've also tightened up processes for tenants to request rent relief, and it's now a very detailed and prescriptive process. And I dare say one that very much favours the tenant, and there's some deeming provisions, which is obviously the next icon. So yeah, as I said, there's deemed acceptance provisions that so long as you meet the mandatory requirements, the minimum mandatory requirements, whether you hear back from your landlord or not, once you've demonstrated that you've met those requirements, then you can self-apply the rent relief provisions to the rent that you currently pay. There is also a mandatory reassessment along the journey. So the scheme roughly runs for 6 months from the 28th of July to the 15th of January. And partway through, there's a mandatory reassessment under certain conditions, and I'll go through those with you a bit later as well. And finally, there's protections for tenants. And these include that there can't be any rent increases during the relevant period as well. So, and again, I've got some further information about what other protections are afforded to tenants. Just before I get to this slide, it's important to note there's an important deadline looming, which is the 30th of September, so it's a week away. And if the tenant wishes for the rent relief to start from the commencement of the scheme, which is the 28th of July, then the tenant needs to submit their application to the landlord in the prescribed format by the 30th of September. Any applications received after the 30th of September, they'll commence from that date onwards. But I'll now go into eligibility. So in order to be eligible to participate in the scheme, you need to have an eligible lease. And an eligible lease is either a retail lease or a non-retail commercial lease or license that was in effect on the 28th of July 2021 and you were a eligible tenant, and I'll define what an eligible tenant is shortly, and you are not excluded under Regulations 7 and 8. And Regulations 7 and 8 effectively exclude leases where the premises are used for either agricultural or horticultural purposes, or under Regulation 8, the lease is excluded because either you're a listed corporation or a subsidiary of a listed corporation. So who are eligible tenants? So to be an eligible tenant, on the 28th of July 2021, you either needed to be carrying on business in Australia, or you were a non-profit body who pursued objectives principally in Australia, or you were an endorsed deductible gift recipient. In addition to meeting one of those three requirements above, you then need to satisfy all of the following three criteria. So you need to be a SME, small medium enterprise, and that's defined as an entity that has a group turnover of less than $50 million. And that applies for if the business has traded for all of the FY21 financial year, you need to look at the group turnover of the group for FY21. And if that's less than $50 million, then you are an SME. If you didn't trade for all of FY21, then you need to project what your projected turnover of the group will be for FY22. Once you've satisfied that you're an SME, you then need to look at the decline in turnover on a non-group basis. So this is then, whereas the first test is done on a group basis, the second test is done on a non-group basis, and you're looking at the declining turnover of the particular entity that's looking to seek rent relief. So Daniel will go through the decline in turnover test shortly, and then you are not excluded by Regulation 8 or 7, which is that you're not operating an agricultural business, or you are part of a listed group, or you're either a listed company or a subsidiary of a listed company. To apply for the rent relief, I mentioned before that it's a very prescriptive process, and the request for relief must be made in writing. There's no actual template to be used, but so long as your statement contains the following information, this will suffice as meeting the requirements of, demonstrating that you've supplied all the relevant information in the prescribed format, or in the format that they require of the information to be detailed in. So you need to be able to define that you are an eligible tenant. That's step number one, and we've gone through that in the previous slide. You need to be able to demonstrate that you satisfy the decline in turnover test. You need to set out the test period and the comparison period, or an alternative period if you're using an alternative period and an alternative test. You need to set out the turnover for that period and the comparison period, and you need to calculate the decline in turnover. You also must set out the rent reduction that would apply, and therefore, based on the decline in turnover, you are effectively telling the landlord what the rent relief needs to be. If there's any other additional circumstances you think are warranted for consideration, you can provide those as well. But essentially, you need to tick off on all those bullet points in a statement, and then provide that in writing to the landlord. And that is the initial application. Once the tenant has served the request to the landlord in that written format, the tenant then has a further 14 days to provide further evidence in support of their request for relief. And as part of that supporting evidence, the tenant needs to provide either one of the following as evidence of their turnover figures and that they have met the decline in turnover test. So the first one of those would be extracts from your accounting records. The second is bank statements. The third would be a lodged BAS, or finally, a statement from a practicing accountant. And this is obviously something that we could assist with. Obviously, you need to give careful consideration to what you're providing your landlord. You want to make sure that you're just simply giving them enough information to support the reduction in turnover. So extracts of accounting records or BAS statements, for example, may also include other additional information that you might not want to disclose with the landlord. So you might therefore be looking at either the numbers on a lodged BAS or a statement from the practicing accountant. In addition to the evidence requirements above, the tenant must also provide a statutory declaration confirming that they are an eligible tenant and that the information that they have provided is true and correct. It's also worth noting that the landlord has rights to request additional information. Then there are some ongoing requirements, and I mentioned these before in a previous slide, but there are mandatory reassessment of rent relief arrangements where you have the following three conditions. And that is, one, there is a relief agreement that has been made and provided. The tenant requested the relief prior to the 1st of October 2021. And the tenant commenced trading prior to 1 April 21. Under these circumstances, the tenant must provide reassessment information to the landlord by the 31st of October. So it's important to note here that there was a critical date that I mentioned before, which was the 30th of September. If you are making a request prior to the 30th of September, the scheme applies to the commencement of the scheme, which was the 28th of July. If you make your request after the 30th of September, then the scheme will apply from that day onwards, which means then that the mandatory reassessment rules will not apply in that situation, because you will not satisfy the second point there, which is that the tenant requested relief prior to 1 October 21. However, if you do have the arrangement in place prior to 30 September, then the reassessment provisions apply, and you need to provide further information to the landlord by 31 October. And this includes details of your turnover for the September quarter, the turnover for the comparison period, and then a recalculation of the change in turnover. And therefore, upon that reassessment, any adjustment from the original rate to the new rate will require a further adjustment in rent relief that will be applicable from the 1st of November onwards. So that could include either your turnover reduction being more than the original calculation or less than the original calculation. But from the 1st of November, the reassessed reduction in turnover would apply then from the 1st of November onwards. Thanks, Lise. There are also some protections afforded to the tenant that are also included in the regulations. And the tenant will not be in breach of their lease under the following circumstances. So they've made a rent relief request and it has not lapsed, and so the rent relief arrangement is still in place, so you won't be in breach of your lease under that circumstance. You continue to pay the rent in accordance with the stated decline or in accordance with an agreement reached between the landlord and the tenant. You will also not be in breach of the lease if you are unable to trade due to sickness, injury, or natural disaster, or where there are whether you've reduced hours or ceased carrying on the business. So I'll then hand over to Daniel, who will go through the calculation tests. Thanks, Dan.
All right, thanks, Chris. So as you would understand, one of the critical criteria that needs to be met in order to be eligible for the rental relief under the scheme is to satisfy the decline in turnover test. A tenant satisfies a decline in turnover test if the turnover for the turnover test period falls short of the tenant's comparison turnover by 30% or more, or 15% for registered charities. And this sentence introduces a couple of concepts, being the turnover test period. So the turnover test period has various meanings depending on the date the tenant started trading at the premises, as is indicated in this table here. The term comparison turnover is the tenant's turnover for the relevant comparison period, or if applicable, an alternative comparison turnover period. So as you can see from the table, the test, there's 4 separate periods of when the tenant started trading, and there's differing turnover test periods and comparison periods for each trading commencement date. So firstly, if the tenant commenced trading before 1 April 2019, then you can see the turnover test period is any 3 consecutive months between 1 April 21 and 30 September 2020. And the comparison period is the same 3 months in the year 2019. The tenant started trading between 1 April 19 and 31 March 20, which I note is pretty much the last period before the impact of COVID. So the COVID impacts were starting from about March 20. In that case, the turnover test period again is any 3 consecutive months between 1 April 21 and 30 September 21. But the comparison period in that case is the average monthly turnover up to 31 March 2020 expanded to create a quarterly figure. So what that means is you take the total turnover for each whole month from the start of trading to 31 March 20, divided by the whole number of months of trading, and then times it by 3 to get a quarterly figure. If the tenant started trading between 1 April 20 and 31 March 21, this is obviously the first full year of the pandemic since the pandemic started. Again, the turnover test period is 3 consecutive months between 1 April 21 and 30 September 21. In this case, the comparison period is similar to the previous start date, but this time use the average monthly turnover up to 31 July 21 to create and expand that to create a quarterly figure. So again, you sum the turnover for each whole month from the start of trading to 31 July, divide by the total number of whole months, and then multiply by 3 to get a quarterly figure. And the last calculation for decline of turnover is when the tenant started trading after 1 April 21. In this case, the turnover test period, really, it's any figure that the parties agree is equivalent to the quarterly figure, determined and negotiated in good faith. And the comparison period is the tenant's turnover from the date of starting trade to 31 July 21, similar to the previous tenant start date. This time you divide by the number of days the tenant was trading and multiply that by 92 days. So this is the next slide. Thanks, Lisa. So as mentioned previously, for most businesses, the turnover test period is the 3 consecutive months between 1 April 21 and 30 September 21, with a comparison period being the same 3 months from 2019. However, if your business started before 1 April 2019, but there were events or circumstances outside your normal business settings that mean that the normal comparison period is not appropriate for your business, you might be able to determine your decline in turnover by using an alternative test. Now, anyone who is involved in assessing decline of turnover under the JobKeeper measures, this is quite similar. So there's quite a few different alternative tests, but I'll only go through here and on the slide sort of 3 of the most common situations where these can apply. So Regulation 22 talks about a situation where there's a sole trader or a small partnership and there's a sickness, injury or leave. So where does this apply? Well, this applies if there's a sole trader or a small partnership that has no employees, and the sole trader or at least one of the partners did not work for all or part of the relevant comparison period due to serious sickness, injury or leave, and the tenant's turnover was affected by the sole trader or partner not working for all or part of that period. So in that case, The comparison turnover is the turnover from the month immediately before the month of sickness or leave, and then multiply that by 3. So you see they're trying to exclude the effect of that sole trader or partner's absence from the calculation. And similarly, regulation in 18 and 19, they cover the situation where there might be a business acquisition or disposal or a restructure that changed the tenant's comparison turnover. Again, this applies where the tenant's comparison turnover changed because there was an acquisition or disposal of part of a tenant's business or a structure of the tenant's business on or after the start of the relevant comparison period, but before the applicable turnover test period. And in this case, the turnover from the month immediately after the month of the acquisition, disposal, or restructure is taken and multiplied by 3. So again, they're trying to compare apples with apples. So they're comparing a turnover a period where after that change occurred, because the impact of that change is also current in the test period as well. Another situation is covered by Regulation 20, and this is where a business is affected by drought or natural disaster. So this applies where the tenant's turnover changed because they conducted business or some of the business in a declared drought zone or declared natural disaster zone during the relevant comparison period. In this case, the turnover of the same period in the year immediately before the declaration of drought zone or natural disaster zone is taken into account. And if anyone wants to read further into some of the other alternative tests, there's quite a good table in Table 4 of under the frequently asked questions on the Victorian Small Business Commission website. Oh, sorry, Lisa, can you just go back to that previous slide? Just also to mention too down the bottom, just to highlight, as mentioned by Chris, the eligibility for rent relief is reassessed for rent relief requests made before 30 September and for tenants trading before 1 April 21 to ensure whether the circumstances have changed and the rent relief should be adjusted. And this just notes that, that the same test must be used for reassessment that was used when you determined your initial eligibility for the relief. Thanks, Lisa. Okay, so turnover. How do you calculate turnover? Well, turnover for the purpose of the calculated decline of turnover in this case is defined as GST turnover. And GST turnover is the sum of the value of all supplies and entities made during the period. That includes various things. It includes the proceeds of sales and sale of goods and services, including turnover from internet sales, includes commission income, repair and service income, rent, leasing and hiring, government bounties and subsidies, interest, royalties and dividends, other operating income, pretty much everything you would expect. It also specifically includes payments such as the Victorian Government COVID Business Support Fund, payments received by the tenant during the relevant period. It includes taxable supplies, it includes GST-free supplies such as the sale of food or medical services. And it includes supplies that are not expressly linked to turnover associated with the premises. Previous rent relief scheme actually specified that the supply had to be linked with the premises that you were claiming the rent relief for, and that doesn't apply in this case. Now, what doesn't it include? So it doesn't include GST. It doesn't include any financial assistance paid to the tenant by the Commonwealth in response to the coronavirus. It doesn't include input tax supplies, which as we know is residential rent, income from financial supplies. It doesn't include any supplies for nil consideration unless the associate rules apply. And it does not include supplies not connected with the enterprise. So modifications for the modifications to the definition of GST turnover for the tenancy relief scheme. Well, the regulations require additional specific amounts to be included in GST turnover for the purposes of the decline in turnover calculation that would not ordinarily be captured by the standard definition of in the GST Act. For example, supplies within a GST group. So when supplies are provided between members of the same GST group, usually they're excluded from the BAS, but in terms of calculating GST turnover for the decline in turnover test, they are included. So normally a GST group prepares and lodges one BAS on a group basis. Supplies between members of the group are ignored and not reported on the BAS. But for the decline in turnover test, turnover must be considered and calculated on an individual entity basis. Supplies to other members of the group are included in the decline in turnover calculation. And as I mentioned previously, state government COVID support grants are included. They're included as GST turnover for eligibility purposes. I suppose I highlight this because these are types of a type of income that wouldn't ordinarily be included on the BAS because it's not the consideration for a supply. I've also noted down the bottom there that for deductible gift recipients and for ACNC registered charities who are not DGRs, gifts are treated as consideration for a supply to the value of which is equal to the amount of the gift, and gifts by monetary donation, gifts of property with a value of more than $5,000 and listed Australian shares are treated as consideration for a supply. Again, ordinarily they wouldn't be supplies that would appear on a BAS. Thanks, Lisa. Okay, how do you calculate your turnover and the value of supplies? So the value of supply for declining turnover calculation is the GST exclusive consideration received in relation to the supply. Again, the relevance of this is really to say that you can't just rely on the figure that's reported at G1 as total sales on your BAS when you're performing your decline in turnover. Reasons for this? Well, one of the reasons is that total sales, as I said, G1 on the BAS is usually a GST inclusive amount, unless of course you're reporting using the simplified method of completing BAS, whereas the decline in turnover calculation requires GST exclusive amounts. Another situation where this is relevant is if you're a property developer that uses the margin scheme. So GST turnover for declining turnover calculations includes the total price of land sold under the margin scheme, whereas the amount you record on your BAS at G1 when you're using the margin scheme is just 11 times the margin on which GST is paid. And the other reason is G1 includes all sales. So it also includes input tax supplies, such as residential rent and financial supplies, and these are excluded from the turnover calculation. So just remember, if you are using figures from your BAS to do this calculation, that you have to make quite a few adjustments to make the turnover figure comply with the regulations. Thanks, Lisa. Just got a bit of a checklist here of things to consider, covering some of the things I've already said, but just things to highlight, some of the things to highlight and where we've seen, I suppose, some errors be made in these calculations. As I said, GST groups, look at turnover on an individual entity basis and look beyond the BAS. For associates, supplies for no consideration are not included unless they're between associates. So if you have a supply of services or goods between associates and the recipient is not registered for GST, the supply is deemed to have been made at market value purposes for the turnover calculation. Out of scope transactions. So as I said previously, you've got to be aware of transactions that are usually excluded from the BAS. And often some of these are included in the calculation of turnover decline, such as charities have to include donations in their calculation. And be aware of input tax supplies and supplies made as an agent. These are excluded from your turnover calculation. Thanks, Lisa. Another issue that we found was relevant is the impact of adjustments. So adjustments to supplies have sort of risen in importance in recent times, as many businesses are seeing a decline in collections due to difficulties that customers experienced caused by the impact of COVID. And we're finding a lot of businesses are therefore offering discounts to customers for goods and supplies goods and services already supplied. The relevance of this is that an adjustment event can cancel or change the consideration received for a supply. For example, something like a discount will affect the value of the supply made. So as an example, just say you make a supply in the test period, say in the 3-monthly period from June to August 2021, just say you supply some services for $550, including GST. So then say in September 2021, you offer a discount to the customer of $220, including GST for prompt payment. So the outcome of this situation is that the credit note has adjusted the consideration for the original supply. The consideration excluding GST was originally $500, but now it has been reduced by the discount. This means the value of the consideration after the credit note has been applied is now only $300, and that is the reduced amount that needs to be included in your turnover calculation. But the rules differentiate between this, which is a discount or a credit, and they differentiate from the situation of a bad debt. So a GST adjustments are also available when a debt has been written off as bad by written off by a supplier as a bad debt. However, note that the writing off of a debt as bad entitles the supplier to a GST credit, but it doesn't adjust the value of the supply made. So in the example before, if the supplier wrote off $550 instead of offering a discount, the value of the original supply for the purposes of determining GST turnover decline still remains at $500. So it's just important to keep note of. Thanks, Lisa. So I'll just run through an example of a calculation of a decline in turnover here. So we've got Bisco. So Bisco commenced business on 15th of October 2018. Their current rent is $120,000 per annum, so basically $10,000 a month. So as we can see from the decline in turnover table, so the tenant has commenced trading before 1 April 2019. So the turnover test period can be any 3 consecutive month period between 1 April 21 and 30 September 21. And in this particular case, the tenant has chosen 3 months ending 31 July 21. So their turnover in the test period is $500,000. And the comparison period is the 3 months ending 31 July 2019. And in that case, their turnover was $1 million. This is a decline of 50%. So as Bisco has a decline in turnover of 50%, which is greater than the threshold of 30%, then they've met their decline in turnover requirements and are eligible for relief under the Commercial Tenancy Relief Scheme. And that's pretty much what I had in relation to decline in turnover and definition of turnover. I'll just hand back over to Chris.
Thanks, Dan. So the next section we're going to cover is on landlord obligations. And as you will see, the landlord obligations are, or the provisions, in my opinion, are very much to the favour of the tenant, and the landlord has very few options for relief. And I'll go through those in a second. But it's important to note, I think, as in your capacity as the tenant, what the landlord is also required to do. So when you submit your application in writing and you've provided the additional information within 14 days of the initial application, and that you have met the decline in turnover test, then there's an obligation for 50% of the rent to be waived with the balance deferred. So you need to, as a landlord, you need to also consider whether the application was submitted before the 30th September, in which case it will backdate apply to the commencement of the scheme, or whether the application is submitted after the 30th September and it will apply from the date of receipt. There's also the question around how you deal with outgoings. Now, outgoings need to be proportionally reduced at the same rate as the rent reduction. The landlord has some deem acceptance provisions that will apply to it. So if an agreement is not reached within 14 days and that the offer provided meets the minimum requirements, then the landlord is deemed to have accepted the rent relief requirements, regardless of whether they want to or otherwise. The only exclusion to that is if the tenant has referred a matter previously to the Small Business Commissioner for mediation, in which case the deem acceptance rules do not apply to the landlord. There's further obligations for the landlord. One of those is that the landlord must increase the term of the lease equal to the period of deferral. So the maximum period of deferral is 6 months. However, the tenant is not compelled to accept the extension. So whilst the landlord is obliged to offer it, the tenant is not compelled to accept. And an offer for rent relief cannot be contingent upon the lessee accepting the extension on the term of the lease. The deferred rent is then payable in equal instalments that are amortised over the greater of the remaining lease of the term or 2 years. And we have a calculation of this in a further slide. Next slide, thanks, Lise. Some further obligations for the landlord. There are prohibition on rent increases. So these are simply not deferred, they are forgone permanently. So at any time during the scheme period, there is a review or rental increase, then these are just simply voided and they can never be claimed back. The landlord cannot charge interest or fees during the time of the scheme, and there are restrictions on the landlord for breaches of the lease, such as where the tenant chooses to reduce hours or close the doors permanently. So I mentioned before, there's support measures for landlords are quite minimal, and they are similar to what was in place with the original scheme. So there is land tax relief up to 25%. And then there is also a small landlords hardship fund, of which details of this fund are yet to be confirmed, but there'll be a $20 million hardship fund put aside for small landlords who can demonstrate that they've experienced hardship as a result of these rent relief provisions. So we're just going to finish off with a couple of slides around calculating the deferral, and I'm just going to continue on from the example that Dan gave before. So we've got BizCo who are qualified for a 50% deferral of their rent. So their current rent was $120,000, which means their monthly rent is $10,000, and half of this is going to be subject to rent relief, of which 25% of this is going to be waived and 25% of it's going to be deferred. So we've got a deferral of $2,500 over a 6-month period. So the total rent deferred is $15,000, and then this is amortized over a 24-month period or the remaining term of the lease. So in the case of where it's amortized over the 24-month period, the deferred rent, which would be $625, will commence from February 22 onwards. So an example here of how that then impacts on cash flow. So in February 22, we would have the original rent that was due, which is the $10,000 per month. We've also got a calculation of the deferred rent under the previous scheme, which in this case is $1,667. We've got the deferral of the rent under the current scheme, which is $625. And so the total rent that would be payable for February 22 would be just over $12,000. And so from a cash flow perspective, you're having your rent at its greatest point when the business is on its path to reopening and re-establishing turnover and patronage and getting customers back through the door. So this is important to know that potentially these deferral amounts are coming at a time when the business is still going to need, the cash flow of the business is still not going to be particularly strong, perhaps. So in this situation, BizCo is going to have increased rental costs of about 23% until July 23, which is when the first deferral scheme ceases, and then it will have an increase of its rent costs of about 6% until January 24, which is when the second, or where this current deferral scheme ceases. So the last slide here is just from a tenant's perspective and how we can help. So we can assist clients with preparing applications for rent relief. We can help clients determine eligibility. We can also provide advice under the alternative tests. As Dan went through today, we can assist with determining GST turnover. And there's obviously quite a few calculations involved with that calculation. We can look at assessing the SME status of the group. We can also assist those clients where the regulations don't apply and they might just simply need to negotiate in good faith with the landlord. And then lastly, we can help with cash flow during both forecasting cash flows during post and pre and post COVID rent relief periods, and also assisting those clients that may need additional funding, again, both post COVID rent relief periods. So that concludes our presentation today. We haven't had any questions come through, and I'm remiss to ask people for questions, but what we thought that we would do in any case is, given that many questions around these provisions are specific to a tenant's particular circumstances and their lease, that we would just encourage those clients that do have questions to contact either Dan or myself directly, and our details are on our website, or alternatively, you can also go back and speak to your advisor with an O'Brien Business Consultants. So that concludes today's presentation. Hopefully you enjoyed it. Hopefully you got something out of it. I'd like again just to thank and acknowledge our Pitcher partners who, again, Lisa mentioned we have a very good relationship with. We're part of a network group that Pitcher partners invite us to, and they have given us permission to utilise these slides for our assistance, which then goes obviously then to help our clients. So we very much thank and appreciate Pitcher partners for them giving us access to their material. So I will leave it at that. Hope you have a good day. Hope you have a good grand final. I hope Melbourne win because that's my team, and I've been starved of success over many years. But yeah, enjoy your public holiday tomorrow, and we'll speak to you soon. Thank you.